Welcome to the daily update, where we'll go through the action in the market for Tuesday, February 7th, and then we'll look to see how things are for Wednesday, February 8th. And I have a few additional charts that I'm going to show today. We didn't really see much of a change, but in the videos, I've been pointing out that I have more of a positive backdrop. I'm seeing things behind the scenes that potentially could be positive. And in fact, even in a few of our charts, we're seeing some potentially positive signals. We're not seeing a real follow through on price yet, and that's what we have to follow. But if we say, yeah, we have a positive backdrop, well, what does that mean? And I'm going to present a few more bits of information to kind of show what I mean by that in this particular video. So we're going to just discuss how things look for Wednesday, February 8th. So let's recap what happened on Tuesday. We did have a flat open and there was initial selling and it looked like, oh boy, here we go. Are we going to break lower? Well, that ended up, that ended up not happening. And after the open, see, I don't really pay attention that much to the open. I follow it and I report on it. And I note that if it's going to be up or down, or we're going to gap higher or lower. But the first 60 to 90 minutes, especially if I'm doing trend-based strategies, I don't even pay attention to the first hour to hour and a half. I wait until later in the day and I want to get as close to the close as possible, because so many strange things can happen right at the open that then lose their steam. And then as the professionals come in and take over, they push the market in the direction that they feel it should go. And that's what I want to tap into. So what we saw on Tuesday was some initial selling. And then once that completed, we saw some buying enter in. But then we went up to such a point, and I'll show this, and then we saw some midday selling start to resume. But there was some late day strength in the market, and we ended up closing up 0.84% on the day. The volume was a little bit higher than on Monday, and we were slightly above average. Not really, really strong volume, but above what we saw the previous day. What we're looking at right now there are still some improving technicals, and because we had an update, we see a little bit of an improvement there. We're still dealing with earnings. There's still inflation that we need to worry about, and that will be a big deal on Thursday with the CPI coming out, because that's where we get the inflation rate. Interest rates continue to go up. We do have some geopolitical concerns, and I've added an extra one that I'll talk about at the end. And then be aware that the CPI is coming out on Thursday. So what can we say about what happened on Tuesday? Prices in the short term are range bound, and I'll show you that when we get to the daily charts. Oil had a big down day, and this is one of the other things that I'm talking about as far as the geopolitical events. Apparently, the Iranian talks have resumed, and that could put more oil on the market, which really saw oil drop. We were up around 92. Well, we dropped below 90 on Tuesday. And I'm still trying to sort through to get through to see some of the information based on what could be happening there. And then I also see a possible upside breakout developing. It hasn't happened yet. There's no guarantee that this will happen, but it's something that we can watch for, and we can use that as a source of conviction if we start to see price really follow that. However, we continue to be overvalued overall in the S&P 500. We're seeing a slightly, it should be weakening trend, slightly weakening trend here. I don't know why I put strengthening right there. We still are mixed as of today. Some of the other things that I'm seeing that could possibly be positive are in some of the other charts. We're not seeing it in the intraday action. So let's look at the day's session. Sentiment is still, we're in the mid-range there. And if we look at the historical chart, that hasn't really changed. The VIX, it continues to drop on a closing basis, and we're dropping a little bit on an intraday basis as well. So we're seeing fear start to decrease slightly. Again, as fear goes down, prices tend to go up. Then with the VIX, on the VIX, we're seeing a continuation of a decline in this indicator, both on the open, high, low, close bar and on a closing solid line. As far as the sectors, the materials did pretty well. Some of the value plays, discretionary, had a pretty good day. The financial sector, tech was even up. But you get down here to energy, and that really got hit hard. But energy has been the best performing sector since we hit the highs in early January. But I have some charts that I want to show later on that talk more about that. Then we did see a bit of a pullback in energy, even though it's still up. It's the strongest sector since we had the highs. And discretionary continues. It had a good day, but it still continues to be in last place as far as the sectors are concerned since the highs. So inflation, we didn't see a really big change in the BDI. We'll get a big reading on that on Thursday with the CPI inflation rate. As far as our technical alerts, not very many because we're still going sideways. The NASDAQ went below 14,000, then it went back above, then it went above 14.1, then 14.2, where the S&P was able to cross above 4,500. And then oil went below 90. As far as our intraday look, way over here on the right, we didn't see much of a change from Monday's close to Tuesday's open. We did see some initial selling. This is what I talked about before, but it wasn't really strong selling. We didn't even go down and hit an S level in here. Once that finished, we bounced back up, and this is the midday strength I was talking about. But after we saw a pretty good climb from that, we did see some selling, and it looked like, oh boy, here we go, some selling into strength. It did drop back. It tried to recover, then dropped even lower, but then we did see some buying going into the close. So overall, that was a bit more positive. Then looking at our daily chart, we're just going sideways right now. We've gone back up to the pivot, and the pivot is kind of the line in the sand, if you will. If we are above the pivot, that tends to be positive. If we're below the pivot, that's negative. Well, we're right at the pivot now, and that speaks more to the short-term uncertainty that I've been talking about. We are down 5.24% since hitting the all-time high. That's halfway into correction territory. We don't really start to treat this more than normal until it gets to below 10%. And so this is just a normal pullback at this point. Here's the high with this one red line at the top. This is about where we are right now. There's nothing out of the ordinary about that pullback yet. Now, if we start to really head lower, that will change everything. But all we can do is evaluate things the way they look right now. Then growth saw just a tiny tick up on Tuesday, and value a tiny tick down. I have another chart here. This is the growth index divided by the value index. And this shows us a little longer term where we did drop below the moving average. And we did see a bit of an upturn on Tuesday, but overall, yes, we're below this moving average. But what we want to see now is this moving average start to roll over. For those of you that were in the markets in 2020, we saw the same kind of play back then with the switch from growth over to value. And that really took things, 2021. I don't remember what I said. We saw, and everybody was talking about it and everybody was freaking out. Well, we were able to recover from that, and we got back into a growth pattern. Well, we haven't hit this low again. We're still looking okay right now, but we want to keep watching this to see what does growth versus value look like. Personally, in the program that I have, I don't care. I just want to know what's supposed to happen. But those people that are heavy into growth stocks, they're getting a little discouraged right now. Well, this might give some hope if we can see some recovery out of this particular chart. Then looking at the NASDAQ 100 versus the S&P, it ticked up, but we are going sideways overall. As far as our trend, this is what I'm talking about with the weakening. And I don't know why I put strengthening on the slide, but this is starting to roll over just a little bit because price is going sideways. So if you went ahead and saw this decline and you opened up some credit strategies or some sideways strategies, you're still pretty happy right now. But if we shoot up or shoot down, that could really bite into some of your strike prices. So that might be something that you really want to keep an eye on. Then this is another indicator that I haven't shown before recently, where this is called the mass index. And this doesn't tell us the direction. This tells us more of the strength. That's why I put it close to the ADX. And we really don't pay attention to this until it goes above 27. That just shows that strength could be building right now. When this actually generates a signal, and it's non-directional, it's kind of like the ADX all by itself. When this comes back down to 26.5, that's when a signal is generated, and it means we're probably going to get going, or there's a probability that we will get going in a trend. It doesn't tell us the direction of that trend. It just tells us that a trend could be starting. If you can look back here, you can see when we crossed above this and we were above it for a while. Well, right here, if I can draw the lines correctly, when it crossed back below this dotted red line, we saw a pretty significant decline. Then up here, when it crossed back below and then went back above and then below again, we saw a pretty significant advance right after that. So that's what we're watching out for. We want to watch to see if this drops just a little bit, and then we use other indicators to tell us, is the likelihood that we're going to go up or down from here. As far as our breadth, we saw a bit of an improvement on Tuesday. The buying power really increased. And so based on price, we saw an advance, and based on volume, we saw an advance, but we're still treading sideways based on volume. The price chart is looking more positive. This is more of a solid uptrend. Volume, which we've been seeing taper off as far as the strength, because through a lot of 2021, it was just a handful of stocks that were really putting the most power into the uptrend. Well, we would like to see this improve if it's going to be more of a broad-based move. Or if we see this breakdown, that also tells us it's more of a broad-based breakdown. Our advanced decline ratio, because we were positive, it went up slightly on Tuesday. New highs and new lows, we're seeing a bit of an expansion in new highs versus new lows. So this indicator shows improvement, and our 10-day moving average is also going higher. The accumulation is above the moving average, and the moving average is starting to move up slightly. That is positive. Our short-term charts, the two moving averages tend to be pretty close together, and they're both going down as price continues to go sideways. And so we're not getting in much from that chart. However, the 20-period moving averages, they're moving up slightly. 50 and 200 are also seeing a bit of an improvement. Looking at our moving averages, we're seeing some overhead resistance. We're still above the 200-day, but we're coming into kind of a mess right here as things are all tangled up with each other. If you're positive, you want to see a break to the upside above these moving averages. If you're bearish, you want to see things break down below the 200-day moving average and then see all of these moving averages roll over with it. We're still kind of in undetermined land right now where the moving averages are acting as resistance. The MACD continues to be positive, even though we've been going sideways. Then the short-term oscillator, and I've noticed this, even though it's short-term, sometimes it can lag a little bit when it recalculates. It's showing things going a bit down on Tuesday, but this could be from Monday's information. So we'll see if we see a bit of an improvement after Wednesday's close in this indicator. The McClellan oscillator, because we had an update, it went back above zero, which the summation index has turned up ever so slightly. The Stochc RSI, we're back up into kind of overbought territory right now, but that can go on for a long time. The intermediate term, the 50-period moving averages, we continue to be below. We want to see it be able to break above this if we're bullish, or we want to see things break down from here if we are bearish. The PMO, this is some other positive signs right here. The PMO was just starting to cross positive overall, and based on price and volume, it's already crossed positive based on price, and it's starting to cross positive based on volume. Then our other PMO study, we saw an upturn as far as the rising PMOs in the S&P. The buy signals are now starting to advance, and those that are above zero turned up just a tiny bit. This is a little slower to turn down here, but this is looking a bit more positive. One thing that's not positive is we didn't see an increase in the bullish percent index. Even though we've had an up day, with the down day that we saw on Monday, we saw the BPI go up a little bit. Well, with the up day on Tuesday, we didn't see this really move up all that much. So this is not necessarily positive with this indicator. Our rainbow, we're still in the middle. We're starting to see the shortest term moving average cross below. But overall, this is the longer term trend that I've been talking about. That is still intact. But these are moving averages, and some of these are very long. I've got a 200, a 225, and a 250 on here. Those are pretty slow, and they don't turn on a dime. They can take some time to roll over because they're lagging indicators. But right now, everything is still looking okay. We can still think that the uptrend is intact. Stochastics, short term, we're starting to see close to an extreme reading. Intermediate term is going up, and the long term went a little bit sideways, but is still up overall. The summation index, this is what I was talking about. We had a bit of an upturn based on price, and we've been coming through fairly well based on volume. Our momentum oscillators, the intermediate term ones, are looking much better. They're actually pointing positive. Our long-term ones, they are starting to cross positive. And our shorter term ones, this one went a little bit sideways to positive, and we're starting to cross and go positive with the other momentum oscillator. Then I wanted to show this. This is a potential negative. With Tuesday's advance, we did see the Chaikin money flow. It's positive, but it declined slightly on Tuesday. Then this is one of the ones that I'm showing for the first time in these sets of videos. This is called the Pring bottom feeder or bottom fisher. And this is a very good indicator for determining bottoms. This is more directionally based. It's not very good at picking tops, but if we look back and see here, just going back through earlier parts of 2021, when we saw a cross above this, and then when this finally started to go higher, we saw a really nice advance after that. In December, when this crossed above the red line, yeah, we chopped around for a bit, but that's when we went and eventually set the all-time high. Well, we're getting close. We're not there yet, but we're starting to see the black line come above the red line. And once that crosses, that would give a positive signal. And these don't happen all that often. It doesn't mean that this is the one indicator that we rely on. We're just looking at the probability of this is providing some of the positive backdrop that I've been talking about and a possible breakout. As far as our trading systems, we went back to neutral with the Elder system on Tuesday, and we continue to be positive on the SAR. Some of our different charts, the Heiken Ashi chart, yeah, we're just treading sideways right now. No change on the Kigi chart, no change on the Renko chart, no change really on the 3-line break chart, no real change on the equivolume chart. The point and figure chart, no real change, but it's still picking up a possible double top breakout, which is positive. We want to see this break out and go up from here. Some of our long-term charts, these are charts that I've been showing that this is looking at a longer term view going back to 1990 of the S&P. This is a daily chart with the 200-day moving average. We are above that 200 period moving average, and the moving average is going up. That's part of the positive backdrop I've been talking about. Here is a weekly chart, and the 200 period moving average, yeah, it continues to go up as well, and we're far above that. Then we have another weekly chart with a 50 period moving average. Both of these, price continues to be above that, and the moving average continues to go higher. Then looking at the monthly chart, we were down a little bit from the month of January, but the moving average continues to be going higher and price is above the moving average. Okay, let's look at some of the broad markets. For the S&P, we're treading water sideways. The mid caps, we could see potentially a little tiny bit of a breakout here. It's trying to come up out of this mess that's been developing for the last few weeks. But the small caps are still inside the mess right now. The FANG stocks, they were up almost 2% on Tuesday, but they continue to flounder sideways. The ARK ETF, it is falling. It was down just slightly, a little bit on Tuesday. The industrials, yeah, we're staying above the pivot, which is positive, and we're above the 200, which is positive, and we're right at the 50 period, which is acting as overhead resistance. So if we can manage to break above this, a lot of positive technical things might happen. Small caps, they need a lot of help though. We've crossed below. That's the death cross as far as the longer term trend. So that's something negative to be aware of. And we continue to go sideways with the small caps. But we've been floundering sideways for quite a while with this index. Mid caps, they're right back at the pivot, which means they're at the line in the sand. So they're neutral right now. But they've been treading sideways a lot over the last year or so as well. The NASDAQ, it needs some help. It's going sideways. It's below the pivot, and the line is in danger of crossing below. So that's potentially negative. This is why I say we have a mixed picture right now. Same thing with the NASDAQ 100. We've been bouncing in the same range for the last 4 trading sessions now. Then this is another chart that, oh, I'm sorry. It's hard for me to see this. And so I have to kind of guess what these charts are. This is the VIXN. And we did see a bit of a decline, and it closed near the low on Tuesday. That is showing that fear is decreasing, at least for right now. Then the NYSE composite, this is more positive. We're above the pivot. We're above both moving averages. So that could be seen as a positive sign. The Wilshire, this is a little more that we have overhead resistance. It came right back up to the pivot. Then I wanted to bring this chart up because I haven't really shown this in a while. This is looking at the S&P 500 against a lot of the different world markets. China, yeah, well, they were closed for a week. So really, we didn't see much change there. And they had one up day and one down day. The emerging markets are showing some weakness. Europe is showing some weakness. Japan, some weakness. But you can see, and it's a little hard to see here, this is just turning up slightly on the S&P 500. We want to see a cross back positive if you're bullish. We want to see continued declines if you're bearish. As far as the broad market here, the dollar had a little bit of an up day on the daily chart, and it ticked up ever so slightly for the week. we're trying to get back to this moving average on the dollar chart. The reason I'm watching the dollar is with all the influx of liquidity and with these trillions of dollars that have been thrown into the US economy, inflation should be a real problem, which it is, but we should also see the dollar declining because there's more and more dollars out there. And so the value of each individual dollar should become less. Well, so far that has not happened. The dollar has been holding up well. We were breaking down. We got back down to the 90 level back in 2020, but we've been in a pretty solid uptrend ever since then. So we keep an eye on this very closely. Plus, if you're doing any traveling, you want to check the exchange rates and so forth. But that's why I watch the dollar very closely. The stock market tends to like a weaker dollar because when you convert things, it looks like you have more dollars. Okay, and then this is oil that fell down just slightly below into the 89 range, below 90. The gold continues to tread sideways, even though it was up about 1/3% on Tuesday. Silver had a bit of a better day. It was up 0.85% and is still bouncing around like a billiard ball. The CRB was down slightly on Tuesday. Then I wanted to bring up Bitcoin just because it's been floundering around in the mid to upper 30s. Well, now it's getting into the low 40s. So all the Bitcoin people seem to be a little bit happier right now. We'll have to see if we can take prices higher or if we're going to hit some kind of resistance before things go lower. As far as bonds, we saw an uptick pretty much in the longer term maturities on Tuesday, but we saw a bit of a decline in the shorter term maturity. Then I wanted to bring this up just because having not seen the German Bund be positive since 2019, it's been interesting as the EU and England are talking about a stronger monetary stance. That's really pushed the euro up. That's why we saw the big decline in the dollar last week, but it also has helped the German 10-year interest rate go back positive. But bonds, however, continue to be overall. When you take all the world bonds together, they continue to decline. Then here's another chart that's I'm showing for the first time in recent history, where these are corporate bonds. This is the Dow Jones Corporate Bond Index. And this has been in a solid downtrend. These are companies that borrow money, and instead of selling stock or allowing people to have ownership in a company, what they do is they sell debt. And then they use that money to build a factory or to expand or do research and development. Well, we've been seeing a real decline in the bond prices as interest rates have been going up. Then this is a new section. These are some of the relative studies that I'll talk about. And I'm going to probably bring up a lot of these charts again in the video that I'll do for Monday, because I'm noticing that a lot of people are watching the videos that I do on the weekends, but they're not watching them all that much during the week. And I want to have people to give them a chance to see what analysis I do. This first one is energy to the SPY. That's the ETF for the S&P 500. On the daily chart, it looks like we're just screaming here. We're seeing the moving average turning up after having a real downturn at the end of 2020. It's been bouncing around, but appears to be breaking out on the daily chart. But when we look at a weekly chart, we're not so happy here. The longer term trend, it's going up, but we see this red line continue to go down, and we haven't broken above that yet. So even though energy has been doing really well, we potentially want to see some continued strength in this sector before we get real excited about it, personally. Then this is a monthly chart, kind of showing the same thing. We are seeing an overall downward trend. Even though there's much of an improvement, we still need to see things go quite a bit higher in relation to the S&P 500. This is not the XLE by itself. This is comparing the energy sector with the S&P 500. Then another one to show is just a different moving average here with the technology sector, where, yeah, it's been seeing some weakness as of late, but compared to the S&P 500, looking at the daily chart, we're still above this moving average. So on a relative basis, tech is still doing okay. It's weak and it's weakening, but the overall uptrend still is in place. Then looking at the weekly chart of tech, we still see the moving average going higher and we're above the moving average. And then on the monthly chart, we're seeing a pretty good decline here, but the moving average continues to go up and price is above that. We really take notice of this if things start to drop down below. Then looking at, a lot of people have been talking about the economy weakening. Well, it's like they did that for a few days. And then when we had the strong jobs report, they stopped talking about that. And now they're back to worrying about inflation. If we were going to see a real slowdown, if you take, here's the S&P on the top, if you take the staples, the things that you have to have, and compare them to the discretionary, the things that are just nice to have, we are seeing that overall there's been a real decline on the daily chart, but we're seeing some recent strength. Then when we look at this on a weekly basis, yeah, we are seeing some recent strength, but we're in an overall downtrend right now. And if you're looking on a monthly basis, kind of the same thing. Recent strength, but longer term, we're still in a downtrend. Now, another chart I want to show you, and this also adds to the positive backdrop that I've been talking about, is these are high risk credit investments. These are credit spreads. And when this line really goes up, that's when a lot of these riskier investments, or loans, I should say, that's when there's a risk of default. And we can see going back to 2000, there was a bit of an increase. That's when we saw the whole dot-com bubble and then the resultant recession. Then we came back down. And then here, this is when we really saw this spike. This is in the financial meltdown, when there was a lot of loans that were being called in because people weren't able to pay them. And so we saw a real spike in this indicator. Then when we had the whole COVID plunge, we saw the spike again. If we're really getting ready to go down the toilet as far as the economy and as far as the stock market, we would want to see this recent reading a lot higher than it is right now. We're not really showing any signs of danger at this point, which adds more to the positive backdrop. Then looking again, this is the Chicago Fed National Financial Conditions Index. And this goes all the way back into the 70s. And for those of you that remember the 70s, we had some real trouble. As this gets higher, people are not very happy. When we're below this zero line, that's positive. When we're above this zero line, that's negative. And things were pretty rocky there. This is in the bear market of 73, 74. Then in the 1980s, into the mid 80s, when we had all kinds of massive inflation, but then we were able to get that under control. Then it doesn't really show anything when we had the dot-com boom and bust in 2000, but in the financial meltdown, boom, we saw a real spike in this indicator. And then when we had the COVID plunge, we saw a spike. Well, right now, it's actually declining. So that adds a little bit more to the overall positive backdrop. Okay, and then another thing that people say, interest rates up, stocks down. Okay, well, this is something that I found that just says, okay, how did stocks perform during a rate hike environment? Going back to the mid 80s. Well, we saw interest rates going up from the 83 to 84 period. Well, we saw a 20% return in the S&P 500. Then after the stock market crash in 87, we saw interest rates really starting to go up. We saw a 44% return. Then in 1995, around in there with interest rates going up, we only saw a 4% gain. Then around 2000, as interest rates were going up, we saw a 13% gain. 2005 up into 2007, right before the financial meltdown, we saw an 18% gain in the S&P 500. And then lately, up until 2019, up to the COVID plunge, interest rates were being raised and we saw a 28% gain. So yeah, there might be some short-term reaction to interest rates being raised, but longer term, the scenario, and if you think about it, it makes sense. In a expanding economy, they raise interest rates to keep things under control, but that means that the economy is growing, which means earnings are advancing, which means stock prices can go higher because the earnings are justifying the higher prices. So anyway, I just thought that would be interesting to show you. So what is our outlook for Wednesday? The technicals are mixed with a positive backdrop, and I've tried to give a little bit more evidence as to why I'm saying that. The long-term trend is up, but still showing signs of weakness. There are some charts that I did not show today that where I take some of our daily charts and I just switch them over into weekly charts. Those are showing some weakness. So that's some of the weakness that I'm talking about. And I'll try to introduce some of those charts, but I'm trying to keep these videos as short as possible, and they still are too long. We still are in the middle of earnings season. There's still this battle between growth and value. And then the economic reports, there's really nothing coming out on Wednesday. The big one is going to be CPI on Thursday. And then at the bottom, Russia, Ukraine. Apparently that might be easing up a little bit after Macron, the French prime minister, met with Putin. But there's a lot of propaganda going on right now. There's a lot of name calling where Putin is saying that Biden is saying things that might make Russia invade Ukraine or something like that. So it's really just kind of playing itself out right now. We still have the Olympics that are going on that can feed into the political environment. And then these Iran meetings where supposedly they're getting back together and they're potentially causing what could be a complete reverse from what had been US policy before, where there were tight sanctions on Iran and we weren't going to buy any oil from them. Well, now in Vienna, there are some talks going on where they're thinking of lessening some of the sanctions. And so I understand some of the sanctions have been lessened, but I haven't been able to confirm that. And it's a complete reversal from where we were a couple of years ago to what we're doing right now. And that is one of the reasons for the price of oil really dropping. But then you have to look at it. This is a real change in US foreign policy, and what could that do longer term? So our conclusion based on things on Tuesday, the S&P is still mixed because we're going sideways with a possible upside breakout. We want to make sure that it's confirmed by price on a closing basis. That's how I do it. We might have a screaming up day, but it's 30 minutes after the open. We want to see where are things going to close if we're having a real positive price movement. The short-term bias is mixed still, but improving because we had an up day. The intermediate term is also mixed. The long-term bias remains positive, but as I said earlier, there is some short-term weakness here. So thank you. I hope this wasn't too long. I'm just trying to give you useful information, and I want to give you reasons why I say certain things in the videos. So have a very good day, and I will talk to you again after Wednesday's session.